Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to take you through the Forex market wrap and show you the key levels that are being broken this week and what we could potentially expect to happen next week. The dollar downfall continues. We expected the market to have a slight bounce up in around about 97.40s. However, price continues to the downside and is now breaking through 96.40, which was a key low back from December. So expecting the market to continue to push lower and head towards this next supporting area around about 95. So dollar weakness looking good across the board, especially with the likes of euro US dollar pushing higher. Pound US dollar, we were looking for a short opportunity on pound, but it didn't actually come to fruition in the end as the price just continued to push higher. We are starting to find a little bit of resistance at this area, but nothing that really wants us to make us immediately go short in here just ahead of the weekend. The Australian dollar also pushing to the upside. It's still dampened by the mood of the coronavirus and the sentiment with China, so it's not quite seeing the strength that we would have expected, as the market did turn slightly to a risk-on environment earlier in the week, and with the dollar demise, Aussie usually does perform pretty well. But we didn't see that this week. The risk-off sentiment coming back into the markets, with the stock markets dropping quite significantly again, especially the likes of the S&P 500, which we expect to form new daily lows and head towards at least to 800. We'll have to monitor the price at this point and see how the price reacts at 2800. There may be a small opportunity to the long side on a small bounce at 2800. But if the stock markets obviously continue to climb and the coronavirus outbreak continues to cause problems, which it's likely to, we should expect some reaction and some continuation down into this area next week. So still some room to go there, and if you are looking to get on the stock markets, there could be some opportunities to short that on your lower time frame. So just looking at towards sort of your 15-minute, 5-minute time frames, there's some good cycles just through here that you could look to take advantage of, but expecting that downside to continue across the stock market. This has also given a boost to the Japanese yen. We've seen some great declines in the dollar yen, and now we've approached a key 105.90 area. So again, expecting this market to continue to the downside, looking to sell dollar yen on any sort of significant rallies, as well with dollar Swiss. Dollar Swiss has continued to really push to the downside. The currency heat map this week did suggest continuing to buy that Swiss franc and Japanese yen this week, and the market's coming down into these key supporting points. So still some room to go on this, and still some room to kind of take advantage of these markets on any kind of significant pullbacks. Okay, so keep in mind that this risk-off sentiment is likely to continue going into next week. Dollar's obviously feeling the pain, even though we've just had some good jobs numbers and prices still heading lower. So the market's kind of shaking off that sentiment, and we could see prices even lower on the dollar index. So look potentially to sell the US dollar, buy Japanese yen and buy Swiss franc going into next week. Hope you enjoyed this video update with me, John Kibler, head currency analyst. Hope you all have a great weekend.